それでは2025年度の第
I'd like to
2四半期
start the FY
決算概要
2025 second quarter consolidated financial results briefing.
資料の方をご覧ください。
Please look at the
まずはスライドの
materials.
3ペー
Page
ジでござ
3
います。上期決算の
shows an
概況で
overview
す。
of our financial results for the
まず
first
上段が
half.
主力のサービ
First,
スソリ
Service
ューション、
Solutions.
力強い
Our
増収
main
増益とな
segment
りま
had
した。
strong performance with higher revenue, and
上期の売
adjusted
上
operating
収益
profit
1兆
revenue for the first half
665
was
億円、前年から
1,066.5 billion from
4.8%
the
の増
prior
収
year,
です。
excluding the impact from
前年にありまし
restructuring
た事
that
業
took
再編
place
影響を
during
除
the
く実
prior
質で
fiscal year. Revenue
6.4% の
was
増
up
収です。
6.4%, and the
特に
revenue
国内
was
ビジ
up
ネスは DX やモ
4.8%.
ダナ
In
イゼーショ
this
ンに対するデマンドが
This
引
is
き
in
続き
Japan in
強くござ
particular.
い
There
ま
was
し
a
て、
strong
前
continued
年
growth
か
in
ら
demand
約
for digital
9% の増
transformation
収
and
となりました。
modernization, and revenue was up
調
9%
整後営業利益は
year-on-year. Adjusted operating
1196
profit
億
was
円、前年から
119.6 billion
309
yen,
億
up
円の増益です。
30.9 billion yen from the prior year, an increase
34.8%
of
増です。
34.8%.
増収効
The
果に
adjusted
加えて
operating
採算
profit
性改
margin
善
was
により調整後営
11.2%,
業
an
利益率
improvement
は
of 2.5 percentage
11.2%
points
と
from the
前
prior
年か
year
ら
due to the
2.5 ポイ
benefits
ン
of
ト
higher
改善
revenue
いた
in
しました。
addition to increased profitability.
下の
In the
箱、
lower
連
box,
結合計の売上
consolidated
収
total
益
revenue
1
was
兆
1,566.5
5665 億円、
billion yen,
前年
up
から
0.9% from the
0.9%
prior
の増
year.
収。
Looking at this
事業
figure,
再編などの影響
excluding
を
the
除きます
impact of
と、実質
restructuring, it is up
3.6% の増収です。
3.6%.
調整後営
Adjusted
業利
operating
益
profit was
1213億円、
121.3 billion
前
yen,
年か
up
ら
55.2
552億
billion
円の
yen
増益、
year-on-year, an increase of
83.6% の増加と
83.6%.
なりました。
The adjusted operating profit
調整後営
margin
業
was
利益率
7.7%, an improvement
7.7%、 前
of
年から
3.4
3.4
percentage
ポイント
points
の改
from
善
the
です。
prior year. Each
全
business
セグメン
segment
トで
posted
増
higher
益、
profits, and
上期の
adjusted
調整後
operating
営業利
profit
益
for
と
the
して
first
は過
half
去最
reached
高
a
益
new
を更新い
record.
たしました。
At the very
一番
bottom, net
下、当
profit
期利
was
益は
262 billion
2620 億
yen,
円
a new
と過去
record.
最高。
In addition to profit
本
from
業の利
business
益に加えま
operations,
して、
we
富士通
recorded a
ゼネラ
gain
ル
on the
新興電
sale
気工
of
業の
shares
売
in
却
Fujitsu
益を計
General
上しており
Limited
ま
and
す。
Shinko Electric Industries
4
Company
ページ
Limited.
は連結
Page
の
4
調整
shows the
後営業
progress
利
we
益
have
の
made
進
in
捗です。
consolidated adjusted operating
上期
profit.
実
The
績は
result for the first half was
1213億、
121.3
前年
billion
の
yen, up
660億円か
55.2
ら
billion yen
552億の
from
増益です。
66 billion yen in the prior
円
year.
グラフ
The
で
rate of
示していま
progress
す
made
年
over
間の
the
利益
year
計画に
against our
対する
target
進捗
operating
率は
profit
前
is
年の
shown in the pie charts.
22% に
It
対し
improved from
12ポイント
22% in the
改善
prior
しまし
year
て
to 34%,
34%
an
と
increase
順
of
調に
12
推移いたし
percentage
ました。
points, representing solid
な
progress.
お、その
On the
右側
right-hand
下
side of
期
the
の利
page,
益は
operating profit for the second half of the
2386
fiscal year is
億円
forecast
と
to
ほ
be
ぼ前年並み。
238.6
年間では前
billion
年
yen,
から
and at the same level
527
as
億
the
円の
prior
増
year.
益
For the
とな
full
る
year, we are targeting an
3600 億
operating
円を
profit
計
of
画しております。
360 billion yen, an increase of
5ペー
52.7
ジ
billion
は自
yen
動セグメント
year-on-year.
ごとの損
Page
益一
5
覧
gives
で
an
す。
overview of profit
次
and
ページ以
loss
降で
for
個
each
別に
segment.
説
In the
明して
following
まいりま
pages,
す
I
が、
will go
全
through
セグ
results
メ
for
ント
each
が増
segment
益となり
separately,
ま
but
し
let
た。
me know outright that each segment
成長
recorded
ド
a
ライバー
profit.
であるサービス
Service
ソリューション
Solutions
は
are
増
growth
収
driver,
増
had
益、
higher revenue and
採
higher
算性も
profit.
計画
Steady
通り着
progress
実
is
に
also
改善
being
が進
made
みまし
on
た。
improving profitability as planned.
なお、こ
The
の表
far
右
right
側
column
欄外の
shows the
再編
percentage
等を除
increase or
く増
decrease
減
from
率
prior
は
year,
昨
excluding the
年度
effects
実
of
施しました
restructuring.
コンタク
There
ト
is
セ
an
ンター
increase
事
in
業の
sales
売却
revenue
影響を
using the
除い
same
た
conditions
25
as
年度と同一
FY
条件での売上
2025,
進捗で
excluding
す。
last year's sale of the contact
その下、
center
ハードウェア
business.
ソリューション
Below
は
that is
売上
hardware
計上基
solutions.
準変更
Although
の影
revenue
響
declined
や
due to small
アジア
scale,
パシフィッ
low
クにおける
profitability
小
businesses
規
in
模
the Asia
あるい
Pacific
は低
region,
採算事
progress
業の
was
縮
made
小
on
によ
cost
り減収で
efficiencies,
すが、
resulting in
コスト効率
significantly
化が
higher
進展し
profit.
大きく増
From
益で
fiscal year
す。
2025, we have
今年度よ
changed from
り他
using
社
the
製の
gross
ソフトウェアの利
sales
益計上
standard
基
for
準を
recording
総
revenue
額方
from
式から純
software
額
from
方式
the
に変
other
更いたしまし
companies
た。
to a net sales standard. In
要
short,
は付加価
we
値の
have
小
made
さ
this
な外国
revision
品
to
の売
better
上につ
reflect
い
the
て
scale
利
of
益部
revenue
分
from
だ
the
けを売
profitable
上とす
portion
る
of
ことで、
actual business,
よりビジネス実
subtracting
態に
revenue
準じた
from
売上
low
規模の評価
value-added
となる
products
よう
from
見直しを
outside
聞くことで
companies.
す。
And
ユ
Ubiquitous
ビキタスソリュー
Solutions
ションは
revenue
国
and
内
profit
ビジネス
increased
へ
due
の
to
集中
consolidating our
とコスト
businesses in
改善によ
Japan
り
and
増
cost
収増益です。
improvements.
スライド
From
の
page
6ページ以
6, I
降
will
は
show a
セグメント
breakdown of
別の
results
内
for each
訳となり
segment.
ます。7ページ
Starting
が
from
サー
page
ビスソリュ
portion is Service Solutions. Revenue is 1,066.5 billion yen, up 6.4%, excluding the impact of restructuring. There is continued strong demand for DX and modernization deals, primarily in the Japanese marketplace. Revenue from business in Japan was up 8.9% from the prior year. Adjusted operating profit was 119.6 billion yen, up 30.9 billion yen from the prior year. The adjusted operating profit margin was 11.2%, an improvement of 2.5 percentage points from the prior year. On the next page, I will explain the factors behind the change in adjusted operating profit using a waterfall chart. Page 8 shows a breakdown of the changes since last year in adjusted operating profit for Service Solutions. On the very left, adjusted operating profit for the first half fiscal 2024 was 88.7 billion yen, and that will be the starting point for the factors on the right that impact the results for the first half of this fiscal year. First, profit increased by 18.8 billion yen from the impact of higher revenue. The main factor was the increase in the gross margin because of higher revenue in Japan. Second, profit increased by 21.2 billion yen from profitability improvements. This is the result of continuous initiatives to improve productivity, such as standardization processes for development work and automation. In addition, outside of Japan, we started to steadily see the results of restructuring. Overall, the gross margin improved by 2 percentage points. Third, profit decreased by 9.2 billion yen because of higher expenses. We proactively made progress on expanding new investments directly linked to business growth, including enhancements in U-Bounce, the modernization business, consulting, and security. Bringing this together, adjusted operating profit for the first half of fiscal 2025 for Service Solution was 119.6 billion yen. The operating profit margin was 11.2%, an improvement of 2.5 percentage points year on year. Next is page 9. I will now provide some additional information on each of the items in the previous waterfall chart. First, we look at the status of orders which led to sales. This page shows orders in Japan. Orders in the first half rose by 3% compared to the prior year. While the growth rate may appear a bit weak, if you look at the growth excluding the multi-year contracts and large-scale deals that were won in the prior year, growth was up 6%. We perceive this to be the cruising speed for demand in each fiscal year. I will now comment on each industry segment. Orders in the enterprise segment was down 3% from the prior year. Excluding the impact of large-scale business deals for multiple years contracts, orders were up by 4%. Looking at the first half by industry, orders in the retailing and distribution industry held firm, and orders in the manufacturing industry were strong. There continues to be a strong flow of inquiries on DX, SX-related projects and modernization projects. In the finance segment, orders were up 1% compared to the prior year. This is mainly because there were large-scale contracts for financial institutions in the first half of the prior year, but orders continued to remain at a high level in the first half of fiscal year 2025 as well. In public and healthcare segment, orders were up 8% compared to the prior year. The main reason for this is that we won large-scale system renewal projects for the public sector. Mission-critical orders were up 8% year on year. The main reason for this was a system renewal project for Japan government-directed sports competition. There is also continued high-level orders in the national security field, specifically from the Japanese Ministry of Defense. In business in Japan, currently, looking at individual customers, one can see some unevenness from the impact of changes to economic environment. However, gross volume of the deals in our pipeline is continuing to expand across all segments. In the second half, we will continue to make progress on steadily winning deals for a further expansion in the volume of deals. Page 10 shows our order backlog in Japan. The left side of the page shows the revenue target of 1,800 billion yen for the full year. Against this, in the light blue colored column, that is the fourth column from the left, the total actual revenue from the first half and backlog of orders planned for fiscal 2025 is shown to be 1,479.1 billion yen. This covers 82% of the revenue for the full year. This cover ratio is the same level as the prior year, and we consider this to be strong progress. To achieve our full-year target, we need 320.8 billion yen in orders from our pipeline to be converted into sales in the second half. While it is not shown quantitatively, the gross volume for deal pipeline is expanding, and we believe there is sufficient probability of achieving it. We will continue to work to achieve the full-year target. Page 11 shows orders from outside of Japan. Orders in Europe were up 28% from the prior year. The growth is from winning a multi-year contract from data center-related large-scale renewal projects. Orders in the Americas were down from the prior year due to a pullback from multi-year deals in the first quarter of the prior year. Because the region's overall scale of business is small, quarterly fluctuations can be large. Orders in Asia-Pacific were up 8% from the prior year. The step-up in growth was because we were able to win a retail industry-related multi-year renewal project contract in Oceania. Page 12 shows the progress of U-Bounce, which is positioned as a cornerstone of our business portfolio transformation. Overall, orders in the first half were 318.6 billion yen, up 43% from the prior year. The bar graph below shows revenue, which was 311 billion yen for the first half, representing very strong growth of 55% from the prior year. The vertical areas grew by 94%, roughly double the amount from the prior year. The share of revenue from Uvance in the total revenue of Service Solutions grew from 20% last year to 29%. Our revenue target for fiscal 2025, the final year of our medium-term management plan, is 700 billion yen, as shown on the graph on the far right, representing a target growth rate of 45%. Our actual revenue in the first half is only 44% of the amount, less than half of the absolute value of the target, but our growth rate is trending above our target level for the full year, so we are on a solid trajectory to achieve our revenue target. Page 13 shows the status of our modernization business, another pillar of our growth. The level of orders in the first half was 154.1 billion yen, up 3% year-on-year. As shown on the right side, actual orders last year were up sharply by 65% over the previous year, which is driven by the acquisition of large public sector deals, among the factors. Looking at this year's first half, growth appears weak in comparison with fiscal year 2024 because of the pullback, but we are receiving even more orders than last year's high level, with solid growth in line with our plan. In the bar graphs below that, our revenue in the first half was 161.3 billion yen, up 38% from the prior year. The graph on the right side shows this fiscal year's revenue target, which is 303 billion yen. Actual results in the first half were nearly half the amount, with the growth rate trending above our target.
With page 14, I would like to provide additional information on improvements in profitability. There have been continued improvements in profitability, boosting profits by 21.2 billion yen, with a gross margin up 2 percentage points from the prior year. There's been no change in our key initiatives to strengthen our delivery performance, mainly their standardization and automation. The utilization rate of the Japan Global Gateway, or JGG, is 48%, so nearly half of all projects are using it. In addition, the use of generative AI in development process is rapidly expanding. Already, we are providing a usage environment to securely use generative AI tools to 30,000 system engineers in Japan and to partner companies. Of our current level of over 20,000 projects, generative AI tools are being used in some way in roughly one-third of the projects. The actual usage of each project is still just for a portion of the processes, and the effect is limited. But first, we want to expand the range of applications, and then we seek to deepen the usage in a wide range of processes. There are some hurdles, including cases in which we need customers' consent to use generative AI, but by the end of this fiscal year, we seek to expand the usage of generative AI tools to 50% to 60% of all projects, even if it were just for a portion of processes. The usage of generative AI for delivery is not just to generate cost efficiencies. We also see it as an important way to raise the value we provide to customers in need to broaden demand for DX and modernization. Initiatives to standardize and automate delivery are directly linked to higher service quality and the higher speed at which we provide services. We believe that providing high value-added services will also lead to an improvement in profitability. Page 15 provides an overview of each segment in Service Solutions. First, we were able to increase the profit with a good balance among all subsegments. First is Global Solutions. Revenue was 249.3 billion yen, up 1.1% over the prior year. Excluding the impact of restructuring, actual revenue was up 6.1%. Adjusted operating profit was 3.8 billion yen, an improvement of 9.9 billion yen from the prior year. The main factors behind the increase in revenue was the growth of Uvance. In terms of profit, in addition to the benefit of higher revenue, being more discerning on development expenses for each offering had a positive impact. Although profitability is low, it has led to an improvement in profit. While continuing to make necessary investments in such areas as development of offerings and upgrades to our modernization knowledge centers, we will work to further increase revenue and improve profitability. In international regions, revenue was 271.2 billion yen, down 1.6% compared to the prior year. Compared to the prior year, there was a negative impact from exchange rate movements. Excluding the impact, revenue was essentially unchanged from the prior year. Adjusted operating profit was 16.7 billion yen, up 13.5 billion yen from the prior year. The effects of the business portfolio transformation had significant impact and led to profitability improvements. Adjusted operating profit was 16.3%, a 0.6% improvement against the previous year. Regions International, 271.2 billion yen, down 1.6% compared to the prior year. Compared to the prior year, there was a negative impact from exchange rate improvements, but excluding that impact, revenue was essentially unchanged from the prior year. Adjusted operating profit was 16.7 billion yen, up 13.5 billion yen from the prior year. The effects of the business portfolio transformation had a significant impact and led to profitability improvements. Moving on to page 16, I would like to talk about things other than Service Solutions. First, I would like to talk about the Hardware Solutions. Revenue was 424.8 billion yen, down 7% from the prior year. Excluding the impact of the change in the way revenue is recorded, revenue declined by 1.2%. Adjusted operating profit was 12.5 billion yen, up 9.4 billion yen from the prior year. In System Products, revenue in Japan was essentially unchanged from the prior year. Outside of Japan, in addition to changes in the way revenue is recorded, revenue declined because of reforms to businesses and areas in Asia with smaller scale and low profitability. Adjusted operating profit increased because of the impact of an improvement in business efficiency from the integration of manufacturing and sales at SAS Technologies, which launched last year. Revenue in Network Products was still sluggish, but increased by 6.7% over the prior year. Profit increased due to an increase in sales of higher margin products and cost-cutting efforts. Page 17, the top part of the page is Ubiquitous Solutions. Revenue was 113.1 billion yen, up 4.2% from the prior year. Adjusted operating profit was 21.7 billion yen, up 10.3 billion yen from the prior year. The adjusted operating profit margin was 19.2%, an improvement of 8.7 percentage points from the prior year. Revenue increased mainly because of higher demand generated from the ending of support for Windows 1.0. Profit significantly improved because of lower component costs due to exchange rate movements and the shift in sales to a focus on profitability. Towards the bottom is inter-segment eliminations of corporate. There was an operating loss of 32.5 billion yen with a decline in expenses of 4.5 billion yen compared to the prior year. We are moving forward in advanced R&D areas, primarily in the field of computing, including AI-related projects, quantum computing, and next-generation CPUs. While systematically making investments in medium to long-term business growth and enhancing management systems for data-driven management, we are also continuing to work to achieve greater efficiencies in corporate costs. Page 18, I will now talk about the status of cash flows and the balance sheet. Page 19, cash flows. Excluding one-time cash inflows and outflows, core free cash flows was 164.2 billion yen, a significant increase in inflows of 70.4 billion yen from the prior year. In addition to higher profits, progress was made on bringing greater efficiencies to working capital, including inventory assets. In addition, there was a carve-out of Shinko Electric Industries, as well as reduction in capital expenditures. Towards the bottom of the table, free cash flow, including one-time inflows and outflows, was 426.7 billion yen, an increase in inflows of 378.5 billion yen from the prior year. In addition to the improvement in core cash flow, there were inflows from the sales of shares in Shinko Electric Industries and Fujitsu General Limited, resulting in a significant increase. Page 20 shows the status of assets, liabilities, and equity. I will omit the explanation for this page. It's not on the slide, but this concludes my explanation of the financial results of fiscal 2025. I would like to comment on our progress in relation to our internal forecast. The results of the first half were roughly in line with our expectations, slightly exceeding our internal forecast. In terms of segments, results in Service Solutions were as planned, while results in Hardware Solutions and Ubiquitous Solutions slightly exceeded our internal forecast, primarily because of cost improvements. We made steady progress in our results in the first half without any major deviations from our plan, either positive or negative. Market demand for Service Solutions was roughly as expected. Looking at individual customers, one can see slightly stronger or weaker demand as we progressed in the first half, but given the total volume of the pipeline of deals, no significant changes were apparent in the expansion of overall demand. We will continue to pursue revenue growth and profitability improvements as we work to achieve our full-year targets. Page 22. This is a financial result forecast for fiscal 2025. Revenue is projected to be 3,450 billion yen. Adjusted operating profit is projected to be 360 billion yen. Adjusted net profit is projected to be 250 billion yen. All of these figures remain unchanged. On page 23, there have also been no changes to our forecast for each segment. Page 24 shows our forecast for adjusted consolidated results and adjustment items. There have been no changes to our forecast for adjusted consolidated results, adjustment items, or consolidated results. Page 25, likewise, no changes on our cash flow forecast. Page 26 shows the trend of adjusted operating profit on a consolidated basis since fiscal 2019. The bar graph shows the total consolidated profit with the blue portion representing Service Solutions. This fiscal year, the final year of our midterm management plan, we are seeking to achieve a record high level of profit of 360 billion yen and a record high adjusted operating profit margin of over 10%. As I explained, we made progress in the first half towards these targets. While progressing on our business portfolio transformation, we will continue to work to achieve improvements in our consolidated profit and profitability, primarily with Service Solutions, to meet our midterm management plan targets, of course, but also beyond that to sustainably improve our corporate value. Next, while this is not directly related to this first half's financial results, I would like to bring to your attention to the timely disclosure we made today regarding an investment aimed at accelerating our business growth. As I noted in my remarks today, Fujitsu positions Uvance as a cornerstone of business growth. Today, we announced the implementation of a tender offer to acquire shares of BrainPad Inc. and the conclusion of a business integration agreement with the purpose of further strengthening the data and AI business, which is one of Uvance's focus areas. BrainPad Inc. is one of Japan's trailblazers in the field of data science and digital marketing and has a very strong competitive advantage in these areas. The rapidly growing data and AI market is a crucial area that forms the core of Fujitsu's sustainable growth. Through this acquisition, we will further enhance the value we provide and accelerate sustainable growth by leveraging the synergistic strengths of both companies. For further details, please refer to the timely disclosure materials. Moving forward, we will continue to make investments that contribute to the growth of our corporate value while exercising appropriate discipline. That concludes my presentation for today, but I would like to close with some announcements. We recently uploaded our Integrated Report on Sustainability Data Book 2025 to our website. These materials introduce our overall initiatives to create value. Please take a look. That concludes my presentation. Thank you very much.